Good evening to all the participants, the guests. Actually, it's a very, very important session. It is on GST. Uh, the council, on the council, our speaker is going to explain about the details, and also it is important for what I mean to say that updates on GST part of it. And you are all lucky to have the speaker who is actually pan-India speaker or whatever you call expert. I have been observing from the starting of the GST. He has written so many books on GST. Okay, he's a well-known speaker and CMA B. Mallikarjuna Gupta Garu. He's BCom, ACMA, MFM, MIOD, PG, DCS, and certified product manager from Indian School of Business. And over 2 decades of experience in the areas of taxation, GST, product management, and brand management, finance, accounting, sales, operations, marketing, project accounting, ERP, and BI implementation. Worked for Oracle, Info, Logos,
Logosoft,
and Dempro Group. Designed and implemented costing system for a steel plant, biaxially oriented polypropylene and upholstery plant, certified product manager for Indian School of Business. And he is also a member of GST Grievance Redressal Committee, Telangana, and task force member, MSME and startups at Institute of Cost Accountants of India, and expert member for Technology Development Fund Scheme of DRDO, and co-chair for Customs and GST Committee at Federation of Telangana Chamber of Commerce and Industry, resource person and faculty, Institute of Cost Accountants of India, regional training institute, and National Academy of Customs, Indirect Taxes and Narcotics, Navy, and National Institute for Micro, Small, and Medium Enterprises, and served as a member at various committees constituted by the Institute of Cost Accountants of uh, India, and served as a member at the National Council for Indirect Taxes at ASOCHA, and his achievement goes awards and recognitions conferred the Indian Achievers Award 2021 in recognition of his outstanding professional achievement and contribution in national building. Guinness World Records title holder as a team member for the most people running up a single mountain. Selected one among the 100 digital influencers for 2020 by Uber Story. His podcast find a place in the top 10 taxation podcasts in India for 2021. Recognized by the Cyberabad police for traffic volunteering for 100 hours and for conducting the drunken drive. If his remarkable achievements goes on, because to start due to shortage of time, I know you people are very lucky to have the speaker. So now, sir, the floor is handed over to you for uh, to
yeah.
continue
Thank you,
this.
sir, for your
Yeah.
kind introduction and also inviting me to address your members on one of the important topics, that is the implications and decisions taken on the 50th GST Council meeting. Now, if you see that right today, we have completed more than 6 years after the rollout of GST. But still,
Oh.
people say that still we are not comfortable with GST. I mean to say that such people don't know what GST is basically. Now, let us go back to year 2016, in September 2016, when the first GST Council meeting is constituted. And till now, 50 GST Council meetings have been conducted or held basically. And if you see, India is a democratic country, and this is also a classic example of a democratic country in nature. The GST Council, so many decisions have been taken, which has a representation from both the central government and the state governments. And the state governments are ruled by multiple political parties across India. In spite of that, 99.999%, I can take the liberty to say that decisions have been taken in consensus manner, basically. Unilaterally agreed by all, except in one instance where they have taken voting, basically. So this is clearly a remarkable achievement for a country like India with a huge diversity, different political aspirations, and different geographies, different climatic conditions, and different business scenarios across the globe. What happens in Northeast will not happen in extreme eastern side of the country, that is Gujarat. What happens in Ladakh will not happen in the down south in Kanyakumari. In spite of that, we are having a uniform tax. When I say tax, it includes my rate, classification, return filing. That's a tremendous achievement. And if you see the way the tax collections are mopping up, it is really, really tremendous. I was working on e-invoices basically in few countries where e-invoices were introduced way back in 2004, 2006. And today we have introduced in 2020, post-pandemic. And the number of e-invoices issued is far more than many countries which have been implementing it for more than a decade. A billion of e-invoices took for us hardly 2 to 3 years, whereas Turkey, which has implemented more than 15 years, took them almost 1 decade. E-labels, e-invoices, online filing of returns, standardization, all these are the achievements what we have done. And let me tell you, you are also part of that. Why? Because you are helping the ecosystem to come up very easily. So this 50th GST Council meeting has been held recently, and in that multiple decisions have been taken. And if you see the major difference between the decisions taken in the previous GST Council meetings, that means at the time of rollout of GST in the first 1 year and subsequent GST Council meetings, the rate rationalization has come down very drastically. Though we have a 28% tax bracket, hardly any items are there. Not even the number of items in that 28% tax bracket are not even touching 3 digits. So that is the beauty for GST system. And pre-GST era, if you see, we had huge number of taxes, and the average tax rate where you had the incidence of both central excise and VAT, it was hovering around 27% to 28%. Whereas today, if you see the goods rates for predominantly the items are falling between 5, 12, and 18. So that is a tremendous achievement we have achieved, and you're also part of this nation build or this part of this implementation. Now coming back here, in the GST Council meeting held on recently, the 50th GST Council meeting, some of the tax rates have been reduced, especially in the medical field, basically, to make it more affordable. Apart from that, many of these issues are more or less clarification in nature. When we say clarification, that means these have been issued to clear the confusion what the taxpayers, the trade, industry, and professionals are having. Why is it required? Because it is law end of the day, and law can be interpreted by each individual in a manner and fashion, whatever he feels like. Only its vocabulary, interpretation comes into picture. And a simple example I'll give you why we have to be very careful as a professionals. There is a huge difference between provided by and provided to. Now, if you see GST era, all your exemption notifications clearly says that services provided by, which means like government bodies, local bodies, panchayats, all these things. That means they're provided by. That means their output services will not be taxed. Whereas pre-GST era, it is provided to. That means any services provided to those agencies or institutions or government bodies, they are exempted. See the paradigm shift that has taken place from provided to provided by. That means their outward supply is not taxable, but their inputs are taxable under GST. So this is number one point which we need to keep in mind. And when it comes to the rates, let me give you one more example. The other example can be if you see any of these HSN codes, it talks about various chapters and everything basically. So in that, like is a very important word. Goods like. That means it is not, it is exhaustive in nature. They're giving an example. Goods like. Falling under goods, chapter 708, like. Unlimited. But if that like is removed, then it becomes a restrictive in nature. Whatever is given in that particular paragraph, for those goods only, these rates will be applicable. Now, coming back to the 50th GST Council meeting, the recent changes, let me share my presentation and then we can see that one. Give me a moment. Yeah, can somebody just tell me if you're able to see the presentation?
No, sir. I
Yeah.
think share
You're able to
screen.
see the
Yeah.
It's
Yes.
visible, sir? Yeah.
No, 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 no,
Not visible?
no, no.
Just give me a moment. No, sir? Is it visible, sir, now?
No, 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 no.
No. Okay, fine. No worries. We will do this session with PowerPoint presentation only. No worries. I'll be sharing the presentation with Prakash Garu. He'll in turn run with you all. Now, if you see here, 50th GST Council meeting, there are series of circulars issued on July 17th. From circular number 192 to circular number 199. Now, what are these circulars? Now, let us review each and every circular one by one, and I'll try to explain you everything basically. Now, circular number 192, it is predominantly related to computation of interest when taxpayer has wrongly claimed ITC and he has utilized it. Once he utilizes it, he has identified himself that he has wrongly availed ITC and utilized it and he wants to reverse it. Or the taxpayer has received notice under section 73 or 74 or the time of scrutiny of returns under section 61. Whatever may be the case, once ITC is availed and wrongly claimed and utilized, at the time of reversal, the provisions are very, very harsh and stringent. The taxpayer has to reverse it and pay interest at rate of 24%. Now, there can be cases, now if you see many of you are aware and filing of a GST are 3B. If I need to discharge my CGST and SGST liability, first I need to utilize my IGST liability for discharging my CGST. And if something is left over, then I'll be going to SGST. Now, when I reverse it, my IGST balance is only utilized, SGST is not utilized. or I have taken wrongly IGST and I've utilized it for discharging my CGST and SGST. My IGST balance has become zero. That means my utilization has become zero. Because of the condition of this, my IGST balance has become zero. But still I have credit balance available in my SGST. Many representations have been given to the government. And the government said, yes, we do agree. Now what we'll do is, we will not take for individual tax. It will be sum of your IGST plus CGST plus SGST on the date of reversal. If it is a balance is available, then interest is not paid. That means interest is not applicable. Now, say now we are in the financial year 23-24. My transaction have taken place in the year 2018-19. Now, in such a case, after that I must have utilized it. So what the provision says now is, keep on verifying it till your balance become negative in the electronic credit ledger. So 18-19 I had balance, 19-20 I had balance, 20-21 it has become negative in my electronic credit ledger. So from that date, interest has to be computed, not from the date on which you have utilized the ITC. So this is a very, very welcome move. Now, as usual, some of the taxpayers may have a question. Sir, I also have GST compensation cess. Now, can I also include my compensation cess while deriving my total ITC available eligibility? The circular clearly says that no, GST compensation cess should not be included. GST compensation cess should not be included while computing the ITC to be reversed, which has been taken wrongly and utilized. This is what circular number 192 talks about. Then we have circular number 193. Now we all know that availing input tax credit is not a cakewalk under GST. Why it is not a cakewalk? Because of Newton's third law of motion, I call it. I'm sure pretty much every one of you have studied in the younger days in the schools basically. Newton's third law of motion clearly says, for every action, there is an equal and opposite reaction. So every action, there is an equal and opposite reaction. You may be wondering, why am I talking about physics in a session on or a deliberations on GST? It has a relevance here. When GST law got implemented in the initial years, 1 has to be filed and 2 and 3 could not be implemented because of technical glitches as the portal was not ready. As an interim measure, 3B was introduced. So here many people have taken their own interpretations. They said if you file GSTR1, that is sufficient, you need not file GSTR3B. Some said you don't file GSTR1, you file only GSTR3B because government is interested only in payment of taxes. It is not interested how much you're paid, how much tax is being paid on behalf of which customer. Some people merely filed the GSTR1, and when 2A got introduced, it was reflecting in 2A and we all took the credit. But it was never discharged in 3B. As a result, there was a huge revenue loss to the government. Government said, nothing doing. If it is not available in 2A or 2B, you are not entitled to take ITC. Provisions have been tightened. New provisions have been introduced to make it more stringent and effective so that revenue loss is scrubbed. Now this has raised again lot of issues. Sir, मेरा supplier को मैंने payment कर दिया. Supplier has not paid the taxes. What should I do now? Initial days, he has entered my GSTN number wrongly. Or I gave my GST number to my supplier, but he filed it as B2C. All these are the excuses we are hearing. Government said, okay guys, don't worry. Being the first year, we do understand your challenges. So I'm giving you some relaxation. And based on that, the circular was issued in December 22. To be precise, on December 27th, December 27th in the 2022, circular number 183 has been issued. It clearly said that if there is a difference in your ITC availed, that means claim, let me recorrect myself, ITC claimed and amount being reflected in 2-year 2B, 2A. If the balance, if it is less than 5 lakhs for a particular taxpayer, please get a certification from the taxpayer that I have filed my return, but unfortunately I have declared it in B2C in place of B2B or given my wrong GST number. Or I did not file GSTR1 but filed my 3B. So a certification from the supplier was sufficient. Now the question says, if my ITC amount is more than 5 lakhs, then the department said that, okay, if it is above 5 lakhs, get it certified by a practicing cost accountant or a chartered accountant. And when the certificate is being issued by a chartered accountant or a cost accountant, he has to ensure that provisions of section 16, section 17 are met in toto. That means a proper tax invoice should be there. It must have been received. Supplier must have filed the returns. He must have paid the taxes, and you have received the goods or services. If any of these conditions are not met, you are not eligible to take the credit. So when circular number 183 was issued, it was only for the financial year 17, 18 and 18, 19. So we all again went to the government and said, no, 2 years is very short span for us. And after that, we immediately had pandemic. So can you please extend it for further period? Okay, perfect. Now that has been extended to financial year 2021. So now that is taken care with this, and the government is listening to the taxpayers. Now, all this is fine. Now, we had in December 2019, sorry, in October 2019, we had been introduced with a concept called provisional ITC. So, whatever is reflected in your GST or 2A, say if my GST or 2A is reflecting 1 lakh rupees, I can take additional 20% as a provisional credit. So this provisional credit was applicable from 9th October 2019 to 31st December 2019, that is 20%. And from 1st Jan 2020 to 31st December 2020, it was 10%. And from 1st Jan 2021 to 31st Jan 2021, 31st December 2021, it is 5%. Now, since it is got extended for 1920 and 2021, now we have this provisional credit. How it should be handled was the question. So the department said that for 20,000 rupees, in our example, we talked about 20%, right? For 20,000 rupees, get a certificate from your supplier up to December 2019. Up to December 2020, it is 10%. So 10% of your credit, what you have claimed in excess to your 2A, get a certificate from your customer supplier. If it is up to 31st December Jan 2020, then in December 2020, then it is 5%. So whatever is reflected into A over and above the percentage, whatever is the provisional rate, 10, 20 or 5%, for the corresponding amount, please get a certificate from your vendor and your issue is resolved. So if you have received any notice and it is not yet completed, adjudication process is not completed, you can pretty well go submit this certifications from obtained from your suppliers or your suppliers, chartered accountants or cost accountants, and issue is getting closed. So this is what it is going to happen. And wherever the proceedings have completed, where the taxpayers have paid the differential amount through cash or credit ledger, for them this circular benefit cannot be availed. Now, we have e-commerce operators basically. Now these e-commerce operators, after the pandemic, it is becoming very, very important having business to be present on online because it is saving my time, cost, and efforts. If I go to a retail outlet, the shopkeeper has to take a lot of open retail space, pay rent, deploy manpower, pay for electricity, pay for taxes and everything. So his overheads will shoot up. Whereas for e-commerce operators like Flipkart or Amazon or Meesho or something like that, they don't have only any retail establishment, they have only go down, so their costs are less. Now the same is spreading from a B2C segment to the B2B segment. Even companies are preferring the B2B segment because you have online portals where companies can go order their material and then you can have them at your doorstep. Now, so far so good. So government said that if you are having supplies through e-commerce operator, which was going to the unorganized sector, so this e-commerce operators, whenever they're paying to their suppliers, they have to deduct TCS, tax collected at source. Say for example, I am placing an order through Amazon for which goods are supplied by Prakash Garu. So I pay to Amazon, say 10,000 rupees, and when Amazon pays to Prakash Garu, they deduct 2%. That is under section 52 of TCS Act, GST Act. So 9,800 is what Prakash Garu gets, and 200 rupees when the Amazon files the e-commerce return, it gets credited to the cash ledger, and once the Prakash Garu accepts it. So this is a simple straight cut case. Now let us assume because of this business models changing and evolving, now there are multiple e-commerce operators coming into the picture. Now the question can come, how is it possible? Now let us take a small example. I am a registered taxpayer. I am having my office in Hyderabad, manufacturing in Hyderabad. I placed goods on a B2B portal. Let us say XYZ. On that B2B portal, goods are being supplied by, say, Ajay, Prakash Garu, Vijay, 3, 4. Turn, engage a delivery partner who is again an e-commerce platform. Now, if this e-commerce platform is engaging another e-commerce platform, now who has to recover this TCS? That becomes the biggest question. Now the buyer side e-commerce operator will collect payment from the buyer. He will deduct his charges and he will pass it on to the supplier side e-commerce operator. The supplier side e-commerce operator will release the payment to the supplier after deducting his fees and commission. In addition to that, the supplier side e-commerce operator will also have to deduct TCS. So in a nutshell, the supplier side e-commerce operator, once he receives his payment and he's making payment to his supplier, he has to recover TCS and pay the net amount to his vendor. So this is what has been clarified. Now there is also another case where the supplier himself is the e-commerce operator. So in such case, who should recover TCS? So the law clearly, the clarification clearly says that the buyer will make an order through his e-commerce operator, which subsequently routed to the ultimate e-commerce operator, which is owned by the supplier himself. The buyer side, that means when I'm placing the order on the e-commerce platform, he will collect money from me, deducts their fee or commission, and then pay it to the supplier e-commerce operator himself. So that is, he himself is the e-commerce operator. So the buyer side e-commerce operator now has to deduct TCS and submit the balance amount to the supplier side e-commerce operator. This is the changes which have happened in e-commerce operator, and this happens predominantly in large organizations where they have logistic partners are also involved in this. In our day-to-day business, will not have much impact. Now, the next important one is on warranties basically. Now, ideally speaking, if you go through the provisions of supply, it is very clear. But again, as we discussed initially, interpretation is playing havoc in implementation of GST. Now, say for example, I purchased Maruti car. Now, when I purchase a Maruti car, do I go directly to the Maruti manufacturer, Maruti car manufacturing location and purchase the car? The answer is perfectly no. Because I'm based out of Hyderabad and Maruti Cars assembly unit or manufacturing unit is near Delhi. In such a case, Maruti will be selling its cars through their authorized showrooms or showrooms owned by them. Let us take in a case here where I'm going and purchasing a car from a Maruti showroom which is owned by Maruti itself. So when I purchase a car, it clearly says that you have warranty or gap warranty for 5 years on certain items or the products basically. Now, after 1 year, I feel that the side mirror, which is under warranty, is not functioning properly. Because the side mirrors, I use it when I'm driving the car to see what is coming behind me. Based on that, I can navigate myself. So I go to the authorized showroom, authorized retail outlet of Maruti, which is owned by Maruti. And when I paid for the car set 10 lakhs of rupees, that included my warranty price also. Maruti is not going to do any charity for me. If they say this so many cars are going to come, this is part of my revenue, that will be added to the cost where they're recovering from me. So I go to that service center and Maruti replaces that spare part for me. So in such case, do I need to pay any GST? No, I need not pay any GST because whatever I paid at the time of purchase of the car, that is also included in that warranty spare parts. Now, when Maruti is using that spare part, it must have purchased it from some vendor basically. So do they require to reverse the input tax credit on the purchases on which Maruti has procured this rear mirror for me, which got replaced for my car? The answer is no, because the initial consideration, that is the initial 10 lakhs what I paid, is including my warranty costs. So I will not pay single penny to Maruti because it is under warranty, and Maruti also need not reverse it input tax credit because it is already collected that cost of that mirror price from me. Now let us take a second example or second case. I went again, item A, my side mirror got replaced, and item B, I feel that my seat covers are not comfortable, whatever given by Maruti. Since it is 3 years, I've decided to change it. Now my seat covers are not part of my warranty. So Maruti car company showroom, the guy will say that even though it is owned by Maruti, it says, sir, this is the seat covers cost is coming to 25,000 rupees. That is a thumb rule calculation price basically. So on this 25,000 rupees, I need to pay GST, the applicable rate, be it 12 or 18 or 28, whatever is that. And since I paid the consideration of the money, Maruti, when they procured these seat covers from their vendors, they must have paid GST. They need not reverse that GST. Because it is a simple case of supply. Now let us say in the same example, let us extend it logically to next level. The showrooms are not owned by Maruti. They are owned by third parties. Mitra agencies, you have so many Maruti showrooms, right? All these are third parties. Now what will happen in this case? I purchased the car, I paid to the dealer, and dealer paid to the Maruti. After 3 years, I want to replace my side screen. I go to the showroom basically. Now here, two transactions can happen or two scenarios can happen. One, the showroom guy says that, sir, we don't have the spare part with us, the spare side mirror. We will raise an indent to Maruti. They will send it to me. So now it is very crystal clear. Maruti knows that it is being used for warranty only. So they will send it through a delivery challan. So in this case, the dealer is not paying any additional amount, nor Maruti is required to reverse ITC, because the cost of the additional side mirror is already included when I paid 10 lakhs for them. Now the second case, again, let's go back to our initial example, additional seat covers. I'm replacing my seat covers. So in this example, the seat covers, the showroom guy is not having, authorized showroom guy is not having. So he will raise an indent. Maruti will raise a tax, issue a tax invoice, and the dealer will take the input tax credit and he will raise an invoice and he will collect tax from me. So in the first case, additional charges not there. In the second case, additionally they're charging me because seat covers are not under warranty. So they purchase from Maruti, they take input tax credit and they raise a tax invoice on me. This is how it works. Third case, where the material is with the dealer himself. He will not go to Maruti. So Maruti guys, when they send these cars, they have also sent, say, 10 side mirrors. They know that these side mirrors are going to be replaced after 3 years or 5 years. So after 3 years, I went to the showroom. Since it is under warranty, the dealer will replace the side mirror from the stock which he has already received in him basically. Now, since when he procured these mirrors, basically, he must have paid tax. So what he will do, he will raise the tax invoice to Maruti and Maruti will take the input tax credit and pay him basically. Or if the material is already sent to him, he will just issue a consumption voucher basically that these parts have been used. Or sometimes it can also happen that when the supplier, the Maruti showroom guy raises a tax invoice, Maruti has to pay them. Instead of that, they will issue a credit note. So if a credit note is issued, Maruti has to reduce the tax liability and the car showroom, the authorized dealer, has to reverse their ITC. So this is what has been clearly explained. And what has triggered this is nothing but the recent Supreme Court judgment in case of replacement warranties under the sales tax basically. To avoid further litigation basis of the judgment given by the Honorable Apex Court, this clarification has been provided. Now, there is also one more thing basically, extended warranty. Now, what is this extended warranty? Say, for example, I'm purchasing the car, I purchase the car, and then the dealer says that, sir, the company warranty is only for 3 years. If you pay additional 20,000 rupees, we'll cover it for 5 years. This is called extended warranty. Now, when extended warranty is given the time of purchase of the car, it will be treated as a composite supply, which means if my car attracts 28% GST, on the extended warranty also 28% GST is applicable. If extended warranty is purchased subsequent to the purchase of the car, then the GST rate will be the normal warranty rate, that is the 18% tax rate, because it is purely a service. So the time of supply is very, very crucial when in case of selling of extended warranties. So you need to consider these tax rates also when you're purchasing the extended warranty, whether you want to purchase at the time of purchasing the goods or you want to take it subsequently. And we have circular number 196. It is quite common to have a holding company and a subsidiary company. Now, holding company is holding shares, the parent company is holding shares in the subsidiary company. Many questions have been raised whether on such transactions amount to supply, because the related parties. Anything other than the holding of the shares, if there is a transaction between the holding company and the parent company, then GST is applicable. Related party transactions, that is what we call as a distinct person. But in case of holding of shares, now shares are classified as securities as per the Securities Exchange Board of India. Now, if I go back to the definition of goods under section 2, subsection 54 or section 2, subsection 102 of CGST Act, for goods or services, in both the cases, securities are exempted, which means that if a holding company is having shares in the subsidiary company, it is to be treated neither supply of goods nor supply of services. That means it is not at all treated as a supply under section 7 of the CGST Act. Then we have refund related clarifications have been provided. Now, at the time of claiming of the refund, till the issue of circular number 135 of 2020 dated 31st March 2020, taxpayers were claiming refund only if their supplier invoices are reflected in 2A. Now, from 1st Jan 2022, we had section 16, subsection 2, new incorporation has been made, area has been included, which says that for availing input tax credit, mandatory for me to have, it should be reflected in 2B. Now the question arises basically, based on the circular number 135, I'm filing a refund today, that is of 22nd July 2022. So when I am filing the refund, my invoice should be reflected in my 2A or 2B. Now this circular clarifies that if you are filing a refund prior to 1st Jan 2022, then 2A, your supplier's invoice should be reflected in 2A. If you are filing refund after 1st Jan 2022, it should be reflected in 2B. Then only you can claim refund if it is eligible. Similar to that, again in circular number 125 of 44 of 2019, which is dated on 18th November 2019, a declaration has to be provided by the taxpayer for availing input tax credit under RFD 01 to incorporate the above discussions what we have made 2A, 2B. Those things are also have been incorporated and those will be applicable in the new refunds basically. And there is also one more circular issue basically. Now, as per the provisions, if I'm an exporter and if I don't receive my proceeds within 9 months as per FEMA, I need to reverse or repay my refund whatever I collected. That is rule 96A. I claim refund, export of goods. My customer has not made the payment within 9 months as per the FEMA provisions. Whatever refund I have claimed, I have returned to the government and I paid interest also. After 3 months, my customer has paid me the amount. Once my customer pays, what should I do? Can I reclaim? If I can reclaim, can I reclaim the taxes along with interest, or only interest, or only taxes? The circular clearly says that you can claim only the refund under the head under any other refund. Whatever IGST has been paid at the time of export, that will be refunded back. A fresh application has to be made with all documentary evidence that when you have exported, when you have claimed refund, when you have paid back to the government, when you received money from your customer with the supporting bank statements, FIRC receipts, and then go for a refund. Department will give it to you if you file it under any other refund category. Now we have circular number 198. Now circular number 198, we know this e-invoicing is applicable from 1st October 2022, or sorry, 1st October 2020 for taxpayers above 500 crores. And now the threshold limit has been reduced multiple times. And now it is from 1st August 2023. If the taxpayers turnover is above 5 crores, they have to issue e-invoice. That's a separate story. Now from 1st October 2020 to date, similar to the one what we had TCS, we also have TDS under section 52. Now under 52, if somebody is deducting TDS, the government departments, they have taken GST registration only for deducting TDS basically. Now, since they have GST registration number, does it amount to B2B transaction? If it amounts to B2B transaction, the next question comes, do I need to raise a tax invoice? It has been clearly clarified that it is a type of registration. Ultimately, he is a registered TDS taxpayer, GST TDS taxpayer. So if you're doing any services or supplying any goods to government departments who are recovering TDS from you, you need to issue e-invoice. They'll be treated as B2B transactions. Then we have another important circular number 199, which is nothing but input service distributor. Whatever we had it in the pre-GST era, in service tax also we had input service distributor. Now in GST, registration is based on state level, or rather based at state level. Now, the moment I say I have multiple registrations in multiple states, which means that I have one head office and all my other registrations are branch offices. We all know that GST is a destination-based taxation. What is GST? Destination-based taxation. That means the state where the goods or services are consumed, that state should get the share of the GST. Now, input service distributor is also applicable under GST. Now, under this GST input service distributor, there was a lot of confusion. Do we need to take it mandatory? What happens if my branch office is not eligible to take input tax credit? Should I also include salaries? We also have a separate thing called cross charge. Input service distributor for common input services, cross charge for expenditure which are not common but are being apportioned from the head office to the branch offices. Which one I should go? There was a lot of confusion. If you have common input services which needs to be transferred to the respective branch offices of the other states. Is that the only method? It said no. If any particular service is attributable to a particular state, you need not route it through ISD. You can raise the tax invoice under section 631 and the recipient branch of the state will avail input tax credit under provisions of section 16. Perfect, very clear. Now the next question pending is, what about my salaries? Now the CEO's salary, head office rent, all these expenditure are there, which are not attributable to a particular branch office. So that we route it through the cross charge mechanism. Now, when I'm routing it through the cross charge mechanism, do I need to include employee salaries also? Why this question is coming is, if you go back in 18, there was an advanced ruling given by the Karnataka Appellate Advanced Ruling Bench in case of Columbia Asia Hospital. It said even salaries also has to be included, but unfortunately hospitals being exempted services, they were not eligible to take ITC. That was becoming a burden for them. Now with this clarification, what it says is, if it is related parties, second provision of rule number 28 can be leveraged here. It says that if the receiving unit is taking input tax rate 100%, then it need not go by the open market value. See the beauty of it. Second provision says that open market value in case of related parties. So if the receiving unit is taking ITC, then open market value need not be considered. Whatever is the transaction value, that is deemed to be your open market value. Now, if I don't put any value while computing my ASD or cross charge, it says that it is deemed to be nil value. I spent 2 crores on my salaries, and these salaries are not part of my ASD or cross charge process, which clearly says that this 2 crores is deemed to be zero, mentioned in the tax invoice for which you are issuing under reverse charge ISD or cross charge. Now, the second question, if my receiving branch or the unit, like the Columbia Asia case, do I need to include salaries? It has been clarified that salaries need not be included. So lot of benefit is given for the taxpayers. Though these benefits are given, we need to be very, very careful in implementing in the true spirit of the law. Businesses have to carefully go through each and every provision word by word and see the implications, see how their business processes are impacting. Based on that, make a note of it, inform the top management, where required, change the softwares, train the teams, then it can be implemented. And then we have an amnesty scheme released in previous GST Council meeting, which clearly said that if taxpayers who have not filed their annual return or final return, if they're filing it by 30th June, they'll be leveraged from paying 100% late fee. In case of GSTR 9, for the 9 GSTR 9 to be filed from financial year 17-18 to 2021. Now the last date has been extended to 31st August 2023. And there is a cap on the late fee, which is max 10,000 rupees for CGST Act and 10,000 rupees for the SGST Act. In case of final return, at the time of cancellation of the registration, you need to submit a final return called GSTR 10. If you're filing it because you have cancelled your registration and you're not submitted that, now this period has been extended from 30th June to 31st August, and the maximum cap of late fee is only 500 rupees. So these are the major changes which have been announced in the GST Council meeting, and for which circulars and notifications have been issued. So now we are at 17:55, that is we have 5 minutes more. Now I hand it over to Prakash Garu for any questions to be taken up from the participants. Thank you, sir.
Yes, yes, sir. Yes, sir. Thanks a lot. Actually, it is a wonderful session you have taken up and exposed them to professional sphere. Yes, sir.
Yes, sir.
All the participants, you see, because our basic, whatever the IPA course is conducted, it is in a platform. I mean, it's like a sort of a foundation stone for you to expose to professionally how the practical aspects in all the accounts and finance and the taxation, direct and indirect taxes. Yes, sir. Mallikarjuna Gupta garu, I do want to enlighten you about our students. Actually,
Yes, sir, please.
BCom, MCom, MBAs, all these people, they've been whatever they've learnt in the colleges, they're not able to implement or work in that, in their field as accountants, executives, and the taxation experts, because they're not having that whatever the about the tax laws sections, and then how to read the section part of it. Where do we find that information? What is a
Yes.
case law? All these things. It is a next level. That's a reason. Whatever you have heard him, all of you would have got surprised or a shock. And what is that B2B? What is these farms and all? He's talking about that GST Council. He's talking about so many case law sections, all these things. Yes, these are all this sort of all India seminars. He takes up these matters to whom? To all the experts of India, managing directors, or you talk about the chartered accountants, cost accountants, government officials. That's the reason we do want to expose you to how these sort of seminars will be. And he's also, and when I have interacted with him, we are planning to introduce, it is a sort of a GST specialist on all India level basis, and with his cooperation, with his advice, that will be in a stage by stage to expose you to higher level of studies in that taxation, direct and indirect taxes. So you're all should be, you have to study a lot, and then you have to keep interacting with the senior people. We have all the tax experts of India. That's a reason. And now if we have few queries, somebody, I mean, if you have that, you can open the mic, and then you can just interact fast. Be fast. Our students are very happy to have you. It was you see, normally in case of our All India seminars also, they take up the session only for 40 minutes, please. Make it as a note. Am I correct, sir? Is
Yes,
all
sir.
the sessions part of it, they take only for 40 minutes. He is continuously eloquent speaker, what we call him as
Thank you, sir.
a. Sir, I think time is up. Any more queries, please? Please be brief. Open up your mics. Okay. Then if we don't have, we close the session. Of course, we will also, his presentation way, I will share it. Don't worry. And these are all the meetings. You should get exposed. You should know what's all happening in this field. Okay. Who are all the experts? How to study. So all these things. Okay. So that's the reason. And all the participants, open up the mics and please give him a big hand. Open up the mics, all of you. Say thanks to him.
Thank you so much, sir.
Thank you
Thank
so
you.
much, sir.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you so much, sir.
Yes, yes, yes.
Thank you.
Thank you,
Thank
sir.
you. Thank you, sir. Nice of you, Nadi.
Thank you for your patience sharing, and thank you, Prakash Garu, for inviting me on your forum once again, actually.
It's our pleasure to Andy. Nice of you. Thank you. Good
Thank
day.
you, sir. Thank
All
you.
the best.
Good
Thank
day.
you. Thank you.